Hi, Daniel Rowe here. So the Memorial Day move up on low volume here, this is an hourly chart of crude oil. The Memorial Day push up yesterday on very low volume failed, actually. Last night we started coming down pretty hard into this morning, and then really just came down hard all day long. So I finally got long right here. I was stopped out of an attempt at a long right in here for a 3-tick loss, and then finally got in at this low here. And what I want to do is kind of walk you through my thought process through this trade today. So just starting with the hourly chart, what I want to do is run these different levels, my trend channels, the fibs, and Andrew's median lines, and the ABCD pattern. So this automatically draws that for me. So I connect from the high here to the bar that has the highest close. Okay, so the high of the highest closing hourly bar, which is right there. All right, this orange red dotted line is the AB line. So that is the line from right here to right there. That's the AB line. And that is connected to the high. And that gives me a kind of projection for the angle of descent for this next move down. And you can see we came right down to that line right here. Okay, so now from this high to this high gives me the median line from here, lower median line, lower ML, which we run right into today. So we're running into the prior week low, which is this low. We're marking that low with this cyan dotted line. We're breaking that low. And when we break that, we're running right into the lower median line, the ABCD line, and a lot of volume is coming in. The previous bar's relative density is 161. The last bar had a relative density of almost 150%. The momentum is obviously very oversold at negative 2.5 standard deviations. So now let's look at the half hour. And so on the half hour chart, just running a normal downtrend channel from high to high down to this low, gave me a projection of right here. And this is where I attempted the first long. I got stopped out with 3 ticks. And then we have the overthrow, or the throw under, where we have a climax breaking through that, almost down to the 3rd standard deviation of the VWAP. We get the major spike at the low, which is marked by that triangle with the relative volume. We get relative volume of 195% on the half hour bar, with a climax down into that low. Okay, it's also the support number 1 on the weekly chart and breaking through the prior week's. On the 15-minute, we have the low right at the 161.8 of the 1, 2, 3, 4, 5 waves down. And of course we have 1, 2, 3, 4, 5 waves down. Okay, so that's why I got in right there. I did attempt it here like an idiot. Actually, it was right the bar before, right there, but I'll show you that in a moment. So that was the first attempt. Okay, but this is the obvious pattern here where we have the climax churn bar, very high relative volume, 211%. Next bar is a churn bar, strong churn bar with 229% relative density, 200% relative volume. Here's the 5-minute. This is where I attempted a long, as you can see, right here on bullish divergence potential with that churn bar right there, that weak churn. So once I missed that, was waiting for the next major area, which was obviously down here. So to see that, we run our geometry from high to high. You can see the AB line, which is marked by that orange red line, comes right down and intersects the lower parallel, the auto line, right there where I went long. So you can see that the bullish divergence lines are kind of getting in the way, but here we obviously have bullish divergence on really every bar coming down into this low. It was finally confirmed on that bar with the arrow. But you can see how the market geometry got us in right here with the previous climax churn, and then a churn, and then it comes a little bit lower, and I was waiting for the volume divergence on the 1-minute, which you can see a little bit right here on the 5-minute. But let's look at that 1-minute now. So there's the area right here. Here's the volume divergence, the bullish divergence, and the momentum from way oversold. We get the weak climax into the final low, and then the churn, the weak churn with the relative volume, and the strong churn with the relative density. And then that bar closes up. I wait just a couple of minutes and then take the long right there with a stop below this low. So about a 10, 11 tick stop. Let's see, it was 70. Yeah, 10 tick stop. And you can see I did have this running down. Well, first of all, you can see right here, this is really why I waited, that ABCD line intersects the auto line or the channel line, the opposite parallel, right where that 100% extension meets the ABCD line and the auto line. So that was the exact spot where everything is coming together, and that's where I went long. And you can see here, when I add this channel, the median line, this line, the center line, it's the median line, comes right through into this low right here. So just a perfect place for a reversal. Let's delete those and then see the target. And my initial target for this was breaking this high. So I wanted to see a move back above this high. And just to look at that briefly as to why on the 15-minute, I wanted to get back above this fourth wave. So if we're coming down, we have 1, 2, 3, 4, 5 down. That's the main reason why I went long here. I wanted to see a move back above, or at least back to, the fourth wave. So I was thinking, well, once we got up here, this is where I normally would have exited at. But I was thinking, well, if we get a retracement, it will probably make that second leg back up. So I wanted to see an A, B, C back to this fourth wave high here. And if we look at that on the 1 minute, you can see that's really what we got. We have this kind of a 5 waves up here. We have a nice set of waves up here into the high. So initially, if I were looking for the end of this move, I would have taken one off right here, probably right at that line right there. And then the next one at the volume divergence, which we have a beautiful signal of right there. That's just a perfect volume divergence signal. And then we come all the way back down to the baseline. So now for the C wave up, I would be looking from this low to this low, back to this high, and then getting up to the top of the channel. It looks a lot better on the 5 minute, which you can see right here. So from low to low, back to this high, highest point between the two, and we get the extreme spike into the high on the previous bar, finally coming up and touching, finally coming up and touching right there with a 138.2 meets the upper auto line or the upper parallel channel line, and that's where I get out. And you can see that just as well or even better on the tick chart. You can see this low right here didn't quite break through the volume weighted average price from this low. That's what this green line is, the VWAP from this low. Okay, and then we finally make it up to the top of the channel right there where I get out. And you can see this low right here was actually the highest volume per second of the day. And that's one of the main reasons why I have this chart, is for that volume per second. Use the Chaikin oscillator, which is using volume. So I'm using that with a tick chart, and that gives me, it's just an incredible oscillator to use with tick charts together with my divergence indicator, and then the volume that I've built specifically for tick charts. You can see rather than the low being 0, the low is actually 224. Because if I use the low of 0 right here, and we're looking at volume on a tick chart, there's very little variation in the volume. So I've set the volume for the tick charts equal to about 10% for the lowest bar. It looks like this is about the lowest bar, so that's 10% of the distance here, so that we can see a more dramatic difference from one bar to the next. And you can see obviously the volume divergence here with the climax bar into the low, strong climax bar, all of that volume traded within a split second, and then the next bar right back up is another climax right back up, ending that move. And then I get in just a couple of bars later, a little bit late, but not too much. And then ride it up for a break of this previous high. Okay, so I think with that, pretty good explanation. I know if you don't understand any of this, you're lost, but that's why I'm putting together a course and hopefully a trading room here soon. So all this will be readily available for you guys to learn, because this really is about the best way that I've found to trade. That is anticipatory from areas using market geometry, and then obviously the relative volume and the divergence to confirm the areas and wave patterns. Okay, so with that, we'll call this video a wrap, and looking forward to tomorrow's trading.